From the trading floor of the NYMEX, I'm Jill Malandrino for The Street. And Zook, what a week it has been for you guys in the metal pits, and there's going to be a lot of volatility next week as well with the ECB and Greek bank decisions. Let's talk about what happened with the Swiss this week, because we had the November 30th gold vote, and now they made a currency move. Is this all tied together, or was this a total surprise for everybody?
Certainly a total surprise that they decided to unpeg themselves from the euro, but it's certainly a big game changer for gold. We've seen that. Certainly the expectations of the ECB doing something and something in a big way is probably the writing on the wall, which the Swiss have seen or I'd have been tipped off to. So they were no longer willing to continue to keep that peg in place.
But even before the Swiss move, gold had a pretty good run considering how high the U.S. dollar has been moving and with no inflation. It's just all these asset classes seem to be trading so divergently in such an irrational manner.
We've taken deflation and made gold the only value, storage of value. The commodity sector, crude oil, industrial metals such as copper, all hitting 5-year lows this week. The only value of storage seems to be gold. To a safe haven, even with the S&Ps and equities getting hit. Certainly some people looking for a place to put their money, and they've decided gold's the place.
Well, the even bigger story, like you had said, was copper. A lot of stocks took a hit there, Alcoa, Freeport, and so forth. What's happening there? Because it really is significantly off the charts in terms of the downside.
I believe the other day in which we saw a 20-cent down move, which was the biggest down move we've had in over 3 years, put us at over 5-year lows. That was a Asian trading overnight in thin commodity trading. Certainly we could have seen a capitulation, high volume spike moment way down at 242. We're trading all the way back in just a number of days up almost to 260. The crude oil prices and lower prices in copper should be good for the economy in China. I never bet against China, and with the stimulus packages that they've put in place, I think that we're going to see some support to the copper moving forward, and they may even be interested in buying some gold.
And finally, let's look at gold again, because you've been long-term bearish on it. Do you start to get more constructive because of what's happened in the past week?
Certainly my bearishness had waned. We've looked at maybe a slower this year, coupled with high volatility, I think right. We've discussed. But now with these game changers and currency debasement, I think gold has got a little bit more to the upside.
Okay, thanks very much, Zook. Let's shift gears and talk some energy. Alan, volatility was the name of the game in the energy patch this week, particularly on Wednesday and Thursday. I have to ask you again, is there any support here now?
I still think there's support in the market, although it's lower down. I think it's around the $40 level. As for the volatility, I think we still have some volatility coming up. I don't think it's over just yet.
Is it just what's happening from a fundamental perspective with the supply glut stalemate, or is there anything technically where it's broken?
Well, we don't have anybody really cutting back on the production in a meaningful way. Therefore, still have the supply, still have added supply coming into the marketplace. Therefore, crude oil can't make a rally up. Good for the consumers, great. Producers, though, they've got to be looking at it going, how low can they let it go before they have no choice but to cut back.
Now, if you have a crystal ball, how many months are you looking out before there might be some break to the stalemate?
I think we're going to see it in the next month or two. We're going to see a move to the downside, and then from there after that, we're going to start to see some meaningful cutbacks, and then, unfortunately, we're going to start to see the crude oil rally.
So where do you start getting constructive when it hits 40, if it does hit 40?
Well, I think we have a low of 42.70. That's one level. 41.80, another level. 40.75, and then $40 would be a psychological level.
And finally, let's talk nat gas, because we finally have that cold season for a longer term period in the Northeast right now, and actually across the entire country. Are the lows in? Because it surprisingly over the past couple of weeks has been really low relative to the weather that we've had.
Well, there's still quite a bit of supply of natural gas coming in the marketplace. So yes, it was low, but it also matched the large amount of supply that was coming in, and we didn't have cold enough weather to get rid of it. Just recently, we are getting that colder weather, and it did make the price of natural gas rally. However, what I found unusual is there was a gap to be filled in up to the 350 level. It didn't fill that in. So it leads me to believe that we still have that fill-in that's going to happen. So I think short term we're going to head back up to 350.
Okay, thanks very much, Alan.
Thank you for having me.
From the trading floor of the NYMEX, I'm Jill Malandrino for The Street.